Folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and it is October the 1st, 2020, day one of Q4, and it started off with a wild ride. What we're waiting for right now is news. News out of Washington, D.C. The direction of the market has everything to do with a deal getting struck. I think it's going to happen within hours. Maybe tomorrow, but within hours. Because the reason why I think it's going to happen is that Pelosi had come out. She left the meeting. They were done. And all of a sudden she came out over the weekend and she was talking about a deal. All of a sudden resurrected from the dead. I didn't think there was going to be a deal until after the election. My guess is that the internal polling of the Dems is not well. And the last thing they need is if the stock market goes into a free fall, Trump starts hammering away at them publicly, like he did with Jay Powell when he wanted them to cut rates, and it was highly effective. So that's probably the last thing that they wanted. That brought her back to the table. And they must really want a deal because Mnuchin is holding very, very firm on this deal. And they need a deal. The Trump administration needs a deal because if they do not get a deal, you're going to see this market fall apart. And that can't happen in front of the election. So I think it's going to happen within the next few hours, if not tonight, probably tomorrow. I couldn't imagine them going into Monday morning without having a deal because a lot of faith would be lost. If we get a headline that she's left town or she's probably working from home anyway, if talks have shut down, that's going to mean horrible futures action for Monday. And I don't think anybody wants to see that. So that's my prediction. A deal within hours at the latest by Sunday evening. So we'll keep an eye on this tonight. Let's go to the chat box. Franklin, hello, sir. WG Shocker, good evening. Chuck, Larry, we'll sleep better when XOM starts going up. Yeah, I know, man. I know. We need a deal. That'll kill the dollar. That'll get oil up. Then, then the energy sector, just drew a blank there. The energy sector should follow suit. We need the dollar to drop. That'll send the market up higher. And we saw signs of it today where the dollar was floppy most of the day, but you saw gold rip. You saw iron ore, steel rip. Not rip. It was up on the day, all day. So industrial metals did fairly well. Precious metals did fairly well. That leads me to believe that we're going to have a deal very soon. Oil market not validating and the energy sector not validating. They're in wait and see mode on this one. And I think they're also afraid of the election in general because if control of the executive branch and God forbid all of the legislative branch turns Democrat, the last thing you want to own or anything related to fossil fuels. So I think that's what's weighing on energy at current. But we're going to go over the quarterly charts tonight. We're going to talk about those. We'll watch out for the headlines, watch and see whether or not we have a deal. If we get a deal or if talks break off, we'll watch the futures action as well. And then we'll segue over into chart requests. So let's get to it. No deal. Let's refresh here. Usually we get a red bar when news. Yeah, they're expecting this too. Everybody's watching this. This is so important. I can't tell you. Okay, let's do the quarterly charts, and we'll keep an eye on the headlines. If headlines come out and I'm not watching, if you could drop a note in the chat box, that'll be great. Really appreciate that. Thank you. All right, let's take a look at quarterly charts. Where are we? Because when you're looking at quarterly charts, you're looking at like a daily chart is like the 1,000 foot view. If you're trading, day trading, I mean, that's a real high level daily chart. In our world, the daily chart's like almost the bare minimum that we should be using as swing traders, as investors. I like to know where we're at from a higher level view, the 100,000 foot view. That's why we use quarterly charts. It's multi-time frame analysis. So Q3 2020 in the books, 1 quarter left to go. A lot can happen. So we're going to kick things off with bonds. You need to start with bonds because bonds dictate where the rest of the market's going to go. And I got to tell you, this is a 20-year bond ETF. This is not a half bad chart. It would appear as though we want to hold support at the 160 mark. It appears as though we are consolidating within a wedge formation. And should we break out, that means that yields will press lower. That's good for most stocks, not all stocks. Banks will not do well. Technology will do well. So certain sectors will benefit, others will not. The 10-year yield, quarterly chart. What happened last quarter? Me personally, I think we put in, let's take the Bollinger Bands off here. As a matter of fact, let's keep them on at first. I think we put in a bottom on yields because we plunged down in the Q1 during the COVID breakdown, down below the third standard deviation Bollinger Band. We bounced back. I think we're setting up for a W formation here. We had a big reversal last quarter. This red dot here is the new quarter. We have an inside bar thus far, no new high, no new low. I think that we're setting up for a longer term rally. Now, this is a quarterly chart, right? So this can base for another year and still not look all that much different than what it looks like right now. So what we get a feel for is one thing. We have stopped going down on yields. That's the first checkbox to check off on a stock or an ETF, a sector, whatever you're looking to buy, commodity. If you're looking to buy at depressed prices, the first thing that must happen is it must stop going down, right? So we have that here. Check that box. Now we need a breakout. But if we drill down to a weekly chart on the 10-year yield, we have that breakout so far this week. A breakout, much shorter time frame. It's not registering on the quarterly chart. However, it's significant, can't be ignored because we did put in a W formation on a weekly basis, and now we are inching up higher and beginning to break out above a primary upper band of resistance. If we surge higher, and we can without stocks buckling, but once we get up into the mid ones with all the debt that we put on, the mid 1% range, 1.5%, maybe 1.7, 1.6, it's at that point in time where everything begins to buckle. Just like the last time we hit 2.2% thereabouts back in 2018, the markets began to buckle. That's when Powell backed off his holier than thou, we're going to roll off our balance sheet for the rest of our lives type deal until we go back to normal. Good intentions, but it wasn't to be. The stock market wasn't going to allow it to happen. President Trump knew that he was coming into a re-election, and if the stock market fell apart, forget about that re-election. So here we find ourselves today. The U.S. dollar. The U.S. dollar is probably going to be the trade to watch for not 2020, I think 2021. Because this quarterly chart is very, very significant. In that the dollar on RSI broke down after putting in a lower high last quarter. We have broken down to a new lower low. Does that mean that the dollar drops like a rock? No. It can rally back, counter trend rally, then break down. When the dollar's done, when we say that the dollar is finite, is when we break down below last quarter's lows. Let's throw a number on it. 91.75. We break down below that mark. You had better be long of commodities, gold especially, silver especially, because inflation is going to get unleashed on this economy like you've never seen before. So keep a very close eye on the U.S. dollar. We're already seeing inflation. Different sectors have it. Some don't. Healthcare has it. Excuse me. Those that can collect rents, you're seeing that in rental prices, except in the big cities where people are leaving. So that's a respite for some. Excuse me, folks. So you can see overlaid here, I have in gold, and you can see the inverse relationship. If we break, gold surges. We're going to talk about gold in a moment. The tips. Treasury inflation protected securities. The federal government says there's no inflation. There's none. Don't worry about it. We're going to target 2%. Oh, excuse me. We're not targeting 2% anymore. We want an average of 2%. Over what time frame, we don't know. So inflation is already over 2%. They just don't want to admit it. And how do we know that? We look at the tips. Treasury inflation protected securities. The tips hit new all-time highs last quarter. Why would they do that if there's no inflation? And it's not mom and pop that buy tips. It's institutions. These are people that are in the know. They are buying protection against what they know is coming, and that's a tsunami of inflation. It may not be this year, maybe not even next year, but it's coming. It's going to be like at the beginning, like you put a live frog into a warm pot of water and you just turn up the heat a little bit. And he just boils to death, burns to death. We're going to wake up and find ourselves in that situation one day. The VIX quarterly chart. While we attempted to close down on the day today, this is a quarterly chart, but only one day this candlestick makes. We have held this support level at, where do we close here? The close, let's just call it 26. This support level between 26 and 25, very significant. The fact that we're still elevated above these levels tells me that the market is still in a world of, I don't want to say hurt. I want to say the risk of being in crisis mode. If they can't cut a deal, if some geopolitical event occurs, the VIX is signaling, get ready. Because on a quarterly basis, and I drew these lines a long time ago, we were talking about a cup with handle formation, seen pie in the sky back then, until, of course, we broke out. And that breakout is still occurring. RSI, validating higher lows here. So a lot of risk in this market. We are on very, very thin ice, and they better cut a deal really, really quick. Now, here's where things become a little bit more optimistic, and where I become more optimistic about the China trade. When I say the China trade, I don't mean investing in China. I mean the divestiture of manufacturing out of China. Mexico, Vietnam. Vietnam's in the headlines. We've been talking about this. Now it's making the headlines. Vietnam is the top recipient, along with India, of manufacturing leaving China. Now, the Mexican stock market, I was going to talk about that chart, but it actually was weak, so I'm not even going to bother. But the Dow transports are telling a story that's very, very positive. And that is, we broke out last month, the last quarter, I should say. This is a quarterly chart. We broke out by a hair, but we have broken out. And this quarter thus far, we're holding that breakout. Obviously, one trading day, we know, we get it. A lot can happen here. But it's optimistic. It's good to see. That tells us that, you know what, maybe something going on out there. Look at this, even RSI busted out last quarter. Very nice. So, the transport's interesting. Magnificent volume the past 2 quarters. Stokes are looking good. I like the transports. I got to tell you. Now, I'm not that optimistic about other sectors. In this case, an index, the Dow Jones. I mean, we did not put in new all-time highs, as we did with the S&P 500. The Dow Jones lagged. In fact, it was trending down on RSI. We have a negative divergence going on. Stokes had broken down back here, Q1. We've rallied back. Do we break out? Do we break down? We don't know. The market's going to tell us that. If we get a deal, more stimulus, we break out. I still think that there's a good chance the Dow Jones breaks out by Election Day. Why? Only due to the fact that we may and probably will get a deal which will pump money into the economy and send stocks up higher. So that's the only reason at current. Is there a macro event going on here, meaning with the breakout on the transports? It could be. It could be. We'll keep an eye on it. The S&P 500 quarterly chart. New all-time highs, and on a closing basis, not on an intra-quarter basis. All-time highs. Got to give a tip of the hat. But the trend on RSI is the same deal as what we have on the Dow Jones. Lower highs, lower lows. Volume was good. Ultimate oscillator, lower highs. Let's just call it lower highs right now, not lower lows. So this is an index that's very, very long in the tooth. Can it go higher? Of course. Especially with more stimulus. Yeah. But when it goes, man, it's going to be brutal. The longer they delay the day of reckoning, the worse it's going to be. So, no matter who gets into the White House, this is not getting political. You draw your own conclusions. Either way, no matter what party gets in, they're a big deficit spending party. Republican, Democrat. Is there a difference? Yes. Only to the extent of their willingness to provide more social welfare spending. And on the Democratic side, it's unlimited. It's unlimited. That's the scary part. So we can keep this party going a while longer until the rest of the world says, you know what, if the Federal Reserve is still buying, this party is going to come to an end soon. We might as well be not left the guys during a game of musical chairs left with no chair when the music ends. Since they're going to buy everything right here, right now at a good price, let's sell it to the Fed and get out. And when you see the dollar and bonds drop in tandem, that's when you know we're in big trouble. Right now, we don't have that situation. The IWM quarterly chart, not bad. I mean, we didn't break out. But I went over this chart last night, and I was not optimistic about the Russell. What I am optimistic about, and I get it one day in the quarter so far, is that we gapped up into this wick. And generally when you see that, that's a good thing. You want that next tick up on a new bar when you have a wick or a shadow, topping tail, whatever you want to call it cupcakes, doesn't matter. You want to see a gap up to fill in that gap that was left. And that sets you up for a potential breakout. So in short, what I'm saying, even though we only have one trading day in a quarter so far, watch the small caps. Just watch them. Especially if stimulus gets passed. Technology. I want to talk about this for a moment because it's a chart. I'm going to bring back up the S&P 500. But this time on a monthly time frame. And the XLK on a monthly time frame. And what this topping action reminds me of on the XLK is eerily similar to the October 2007, that would help, and November 2007 timeframes. And that was just prior, that was the top of the market prior to the financial crisis. What happened during that time frame? New all-time highs. Then in November, we made new highs, but failed to hold, and then we engulfed the prior bar, which was very bullish, the prior bar, and we undercut those lows. And back then, the only difference is we closed down below it. But we did take out. It was an engulfing bar. Fast forward to August of 2020, we hit the third standard deviation Bollinger Band, which I'd be hard-pressed if we ever did that before. We haven't. We tapped it, and then we flashed an outside reversal bar. The only difference between now and 2007 is that we did not close below the August lows. But still, this, to me, is a very big sign of be very, very careful. Be very, very careful in the technology space in particular. And I said the S&P 500, you saw the same thing here on the S&P 500 last month. Now, the similarities between 2007 are not the same, but they rhyme. But as far as technology goes, I'm very, very concerned here about technology. So be very wary of this sector. It's come a long way. How much are we up this year? About 30%. And we are trading above, on the year, the third standard deviation Bollinger Band, and we did last year as well. For those not familiar with Bollinger Bands, and I'll save you the technical jargon of what it all means on a relative basis. Basically, I'll summarize it. We're not supposed to be here. We're not supposed to be trading on a relative basis above the third standard deviation Bollinger Band. So be careful. The banks on a quarterly basis in a triangle formation. If yields do pull back, the banks will rally. But I mentioned earlier that it looked as though we had put in a bottom on yields. We could trade back and forth, filling and bobbing and weaving, I'll put it that way, for a couple of more quarters. The banks, I don't know, I think they're dead money right now until we get a significant breakout. We have broken out on the 10-year yield, so short term, might we have a trade on the banks? Sure. In fact, let's drill down. Let's see how we're doing on a weekly time frame. Since we have yields breaking out and not much happening here. And in fact, the 50-period moving average is threatening to take out the 200-period moving average. Not much happening here. That might change on a breakout on yields even further. Ultimate oscillator, very bullish here. Higher lows, hockey sticking up on the week. I don't see a trade here. Energy, quarterly chart. All right, so the bad news for energy, and I own XOM. I know Larry said you own it too. The good news about XOM anyway, it yields over 10%. So that's nice. But it was down today. And we have a new quarterly low. I didn't want to see that. So I think that if the dollar breaks, that we will see a rally in oil. Let's bring up the dollar, overlay it. You can see that, for the most part, that the U.S. dollar and oil trade inversely of one another. The only time that really is not the case is when you have organic economic growth. Strong, vibrant economy, in no need of the Federal Reserve. The Federal Reserve, in fact, is tightening, not cutting rates, and they certainly don't have a printing press going on. But at current, if we break down on the dollar, I would expect to see a reversal on energy because oil should move up higher, along with nat gas. To a lesser extent, nat gas, because we produce so much of it here, but oil should rally. Gold. We're going to go back to the weekly chart. Now, gold had an ominous close last quarter in that it hit the third standard deviation Bollinger Band, in fact, ripped past it. And we were wise enough to book profits on our gold mining trade, some of our gold mining trade, up here, because we knew it wasn't going to last. And it pulled back. And I'm not so much pessimistic about this chart, because we did not close above 1923.70. Of course, we took out all-time highs, but we didn't close there on a quarterly basis. What concerns me more about gold is that we did today, or almost did today, what we should have done yesterday. And what is that? We had broken out back here in July. Great, good stuff. Game on, right? We pulled back because we were overbought in August, and we tested support. Good stuff. Validation. Love to see it. That doesn't bother me in the least that we pulled back. I'm long of gold. Long of gold miners. I love gold. But last month, we broke down below. We failed to hold this support level. That is a bull trap, a breakout point failure. Call it whatever you want. It's not good. Today, we rallied nicely. Do we close above support? Not measurably. So it did today what it was supposed to do today. Why didn't it do yesterday what it did today? Because the stimulus talks were called off. They weren't going anywhere. And then today, rejuvenated, and now there's a bid under gold. Weekly chart. So gold on a weekly basis has good things and bad things going for it. The good thing, RSI hockey sticking up above 50. The bad thing, our Stokes broke down and we are flirting. Not there, could be salvaged, flirting with a breakdown below 50. And if it does that, then I'm going to be instituting my old saying, if we have both lines on Stokes trading down below 50, rallies tend to fade. So be careful. Now on price, a very good week so far. It's a reversal week, a bullish key reversal week. We must hold 1900 on the week. We may retest it next week. That's fine. And then we'll be looking to add more to our gold mining trade on a continuation breakout. Now, we bought back a lot of the gold mining stocks that we had sold earlier in September last week. We sold that position yesterday, or sold some of that position yesterday, and we booked some profits on that because we had that breakout point failure on the monthly chart. I got worried. So we lightened up. It's a core position. So I didn't want to see a gap down on bad news today. So we lightened up. If we have to pay up to get back in on a winning trade, so be it. We're already positioned. If I don't feel like adding more, we won't add more. But I probably will. Because it's a core position. I want a big chunk of gold or the miners going into election day. So the weekly chart's looking very good. Daily chart. We recaptured support on the day. This is what we needed to hold yesterday. RSI broke out today. Volume was meh. Ultimate Oscillator broke out today. MACD long in the tooth. So it looks as though the path of least resistance is to the upside, but we need that stimulus bill. If they walk away, you're going to see gold drop like a rock. Until just before election day, if there's turmoil, you're going to see gold bid, you're going to see dollar bid, because nobody's going to know what to do after election day, because everybody's concerned about for the first time in my life, we don't know. We probably won't know who's going to be president on election day. We have zero faith in that. So, scary stuff. So people are going to want to pick up insurance. So expect volatility right before the election and a bid under gold. Even if we don't get a deal. Right before election day, they'll bid up gold for insurance. The gold mining index, quarterly chart, we got overbought. The path of least resistance remains high. Still bullish on the miners. We have a large position, not as large as yesterday, but we plan on building more as we get more visibility. And this chart here is implying that we have more upside to go. And we are nowhere near the all-time highs on the GDM. This is the gold mining index. So it's got junior miners, it's got the majors in this bucket. So this is an all-in view. Now here's a chart that everybody needs to be paying attention to. And this goes back to our thesis that if and when we see the dollar break and inflation rise here in the United States, that dollar break is going to be a tax cut for emerging markets. So we need to watch it. And overlaid here, you see in green, I have the US dollar to show you the correlation between emerging markets and the US dollar. Emerging markets were in rally mode these past couple of quarters as the dollar dropped like a stone. And it appears as though emerging markets are beginning to break out. If you want to use this pivot, not pivot point, price point, you can. This is on a closing or a high basis. I'd rather use this as an extreme price point. I want to use the highs of last quarter as my breakout point. You can argue that we have broken out already this quarter. Our Stokes, higher lows, broken out. RSI has broken out. So we were in a downtrend channel. All we need to do is take out the highs of Q1, new bull market. And it's very early stages, folks. Very early stages. Now, all emerging markets are not alike. So we can bring up, what was it? Mexico, Here's Mexico. Mexico's not looking too good, right? Lower highs, lower lows. The trend is still down. Ultimate Oscillator's looking good, though. Excuse me, Stokes are looking good. Higher lows, but not to be bought just yet. Now, what is looking good? Vietnam. Vietnam is looking really, really good on a quarterly basis. And when we drill down, we have a very pretty chart here on Vietnam. Vietnam is going to be, my belief, the primary beneficiary along with India, but there are far fewer people in India. So any manufacturing that goes into Vietnam is going to have a far more magnified impact on their GDP. So I think that Vietnam is going to benefit far greater than India, although India will be a beneficiary. So I'm loving Vietnam. We'll be adding this soon. It's broken out on a monthly time frame, and we like EEM, Vietnam, when the dollar breaks, especially because it'll be a tax cut for all these countries who have debt that's denominated in US dollars. All right, that's it for the quarterly charts, monthly charts. Let's do some chart requests. What do I have up here? Do we have any news? All right, what are my symbols? All right, I'm taking a look at my other monitor here, folks. Sorry, I have to get my symbols up for members. Twilio. All right, Twilio. Let's do a monthly chart first. All right, so Twilio already is trying to break out. We have a new monthly high already in October, but it didn't hold it. Weekly chart. I think we're breaking out here. We're using, for those folks not familiar, we're using TrendSpider, 35% discount code below if you're interested in the video description area. Daily chart. I use this company for my text alerts, and they are a cash flow machine. I get notices from American Express that they've recharged my account, and it's like every other day. We have a breakout on a daily basis. I like Twilio. I have zero problem with buying at this point. Nibbling, then buy on the weekly breakout. I think that's exactly what's going to happen. I like the setup here. There's not much data here to do seasonality. Oh, we got a few years. It's only 4 years. You know, I don't want, it's too thin. It's too thin. Twilio looking very good. What else do we have? BBBY. Bed Bath. Monster. Monthly chart. We've broken out. Monthly breakout. And this is a big box retailer. That's good to see. Very nice. Weekly chart, a breakout. We're extended relative to the third standard deviation Bollinger Band. I'd be a buyer down here. I think we're going to retest. So I want to keep this active for a couple of weeks. This is an interesting one to me. So again, we're extended relative to the third standard deviation Bollinger Band. Could they spike it up tomorrow? Sure. But I think you're going to get a pullback. You're going to get a better entry point. So I wouldn't go chasing it. Daily chart. Yeah, how are you going to chase this? It's already, the horse has left the barn. Short term. Longer term, it's got a lot more upside to go. We've gapped up. I think that we need a pullback, filling of the gap here. That'll trigger my alert, and I'll probably be long. And we got to have more data than this for seasonality. Yes, we do. 28 years worth of seasonality. Seasonably favorable period of time, up 61% of the time. We dip down into the 40s in January, February. Huge move up in Q2, month 1, Q2, March each year. And this is 28 years worth of data on this seasonality chart. So seasonably favorable period of time, but that doesn't mean that we're not going to get pullbacks. Then you buy that pullback, jump in there. PINS. I was asked about this. Oh, Pinterest. I've gone over this like 3 times in the past couple of days. Big move. So this is a monthly chart. So the month has just started. It got above 42.56. It was struggling there. We got the retrace down to support, reversal bar, and we have a close above 42.56. Very, very nice. All right, so now this becomes more interesting. If we gap up tomorrow, I wouldn't chase it. If we pull back and retest the breakout point, I would be a buyer. Pins looking awesome, looking good. I'm sure there's no data here. Yeah, 2 years worth of data. Not worth talking about. All right. What else do we have? NVIDIA. For you, Larry, I always have time. NVDA. Okay. Spinning top formation in September. Kind of a sign of indecision, like a doji star formation. Weekly chart. Nice. Nice breakout. And there's very little in terms of overhead supply above. So NVIDIA is looking very good here. Daily chart. A bit of a fade on the day. We have a W formation here, so the logical support level that I would want to use is the pivot point right here. So for those that are new to charting, here's your W. Left side, center, the top being the pivot point, right side of your W. When we broke out here, that was a buy signal, and now we're attempting to follow through. I think we'll probably pull back and retest this mark after being down today in a fairly strong day. So, and the semis were up today too. I'm surprised with NVIDIA. Excuse me. I want to talk seasonality here as well. October is usually up 62% of the time. November, even better. And December is favorable. January, not so favorable. But that's January. That's not now. I think that in all probability, we're going to break out here. The key to watch is your entry point and make sure that it holds 588.88. Within that range, give or take a dime. But it looks good. AGQ. Silver. A very temperamental metal. Well, it's a monthly charge one day here. I mean, it's an instant. We didn't make a new low. That's good to see. Unlike energy. Weekly chart, a little bit of a fade going on here. I think in the end, Larry, what's going to come down to is the deal. And the fact that Pelosi came back to the table, I'm telling you right now, I don't think that their internal polling is doing well. They need a deal. And on a daily basis, we faded a bit. I think the price point to watch is 45.66 because that would mark a close above this volume shelf here. We're putting in higher lows. So there is our triangle formation. And that's what I would add long more. Very long of silver. That's when I would add more. A deal on the table, a breakout in the close above 45.66. We've broken out on Stokes, but still we're putting in lower lows. Higher lows on RSI. I don't see a compelling reason to go jumping in, adding more here after today's fade. So I would wait for the breakout. VSLR. Vivint Solar. I haven't looked at this one in a while. Very extended. I mean, I think that's still probably going to head up higher from here. But it's very extended on a monthly basis. Weekly chart. Powerful, man. There's more upside here. There's no overhead supply above. We did a little bit of a fade on the day. You might get a pullback. They'll probably buy that pullback. It's such a strong stock. So I think that you probably still have more room, more fuel in the tank to send it up higher. Would I initiate a new trade here? No. Momentum traders would. This is the alert point where you want to set your alert at. At around between 40, because this is a rising support level, around 40 to 42 bucks a share on a pullback. And this is a volatile stock. You could easily hit that. So I would show patience here. If you're looking to initiate a new trade, wait for the pullback. Let it come to you. Make sure that it holds support. And it'll probably continue higher. Good looking chart. They cut out. All right, so no stimulus deal. All right, she's saying the talks are going to continue. Let's check out the futures action. These are 4-hour charts. Let's just do a quick walkthrough. First off, the dollar. No real reaction thus far. Gold. Down about a 1/4 percentage point. But no real reaction. S&Ps. Market's taking it very well. I think they know that there's going to be a deal here. For Pelosi to be this verbal, bonds down slightly, not much reaction. I'm going to check back in on it later on, but I don't think that the market's going to react too much. Hey, Anthony. Hey, Bob. I'm a little late. My wife was beating me up. You deserve it. Welcome, man. All right. Let's. All right. So that's VSLR. Boeing. So, Boeing, major announcement today. Moving their Dreamliner production out of Seattle. Huge blow to Washington, state of Washington. For disclosure purposes, we are long of Boeing. see how we closed out the month last month. Basically a spinning top formation. I love the news that they're moving production. I feel bad for the workers. Those are high-skilled workers. But they're probably going to relocate a lot of those people. That's a complex job. We have broken out on a weekly basis, but we have a huge volume shelf above. That's why I have an alert. This is actually expired. I have an alert set up, or had an alert. Let's reestablish this. Breakthrough. We have higher lows on RSI hooking up. Do we have a breakout? Let's get rid of this. Remove. Remove. We have a breakout. We've broken out on RSI. Higher lows, higher highs on RSI. And seasonality. October is a mad month, usually up 54% of the time. But November, huge month, up 74% of the times. Dropping down slightly to 68% in December. I like to trade. Daily chart. Sad that it couldn't hold gains today. But again, we're dealing with a big volume shelf up here. And we have to work through it. We're going to see backing and filling. So you need to be patient with this one. This is a recovery play. But you're getting it at a decent price. You're getting the commercial airline business for free. So at current, it's a defense play with a commercial component. It's like a warrant. So I like it. I'm along with it. AGO. You're welcome, Ben. I think what you have here is a stock. I'm not sure what this is. Is this a? I guess it's a stock. It's traded on the CBOE though. That's odd. What kind of company is this? We've broken out on a weekly basis. I like the setup here, despite that it's weak. Because we had dropped down back here in March, bounced back, we pulled back, but last month we reversed off the lows of the month to close green. You gotta like that. The problem is that you have a whole bunch of sellers within these two volume shelves from back here and up here, but mostly back here, because they're getting made whole right now. And we got to work through it. It's good that we've already seen a new monthly high on day one. That's great stuff. But you can't ignore the overhead supply. Now, on a weekly basis, we've broken out. This is a real pretty chart. So it looks like a good stock. We've broken out on, we're beginning to break out on Stokes. RSI has broken out. Daily chart. Daily chart breakout. Good looking chart. I think it's going higher. It's going to be backing and filling. It's not going to be a straight shot higher because you have all this volume above. But I think it goes higher. Bullish. All right, with that, folks, I'm going to say please smash the like button, subscribe. If you like TrendSpider, click the link below, 35% off. And everybody have a profitable Friday, great weekend, and a profitable Q1 and a healthy one, most importantly. Be well.